Good morning, everyone. Hope you have an amazing Monday morning. My name is Steve Tabrizi. I'm the Chief Operating Officer with the Remax Hallmark Group of Company. For those that they don't know me, Remax Hallmark operate in 5 regions in Ontario, Toronto, York, Durham, Barrie and Simcoe County, and Ottawa. Good morning, everyone. Hope you have an amazing Monday morning. My name is Steve Tabrizi. I'm the Chief Operating Officer with the Remax Hallmark Group of Company. For those that they don't know me, Remax Hallmark we had a little bit of the glitch in our sound system, but my sound engineer, Mr. Shant, just fixed it immediately. So Remax Hallmark operate in 5 regions. We have close to about 1,700 realtor that service multi-communities. And last year in 2019, Remax Hallmark did over $10 billion of the transaction and close to about 22,000 transactions, $10 billion of the volume. So last time we talked about the Ontario housing was just right after the COVID or started sometimes early in April, and we thought it's time that we talk about the first 6 months of the 2020 and what we predict that is going to be beyond the next 6 months in terms of the housing market in Ontario. So we're going to cover COVID key metrics. We're going to cover early sign to gradual recovery. We're going to cover the Canada's housing affordability status. And we're going to cover also a recent survey, which was done among the more than 10-12 economists, Outlook survey. We covered also Ontario's service-based industry. So I'm sure all of you probably never thought that this could happen. Basically, nobody was expecting it to fall off that fast, and nobody was expecting it to take off like this that happened in June. Frankly, personally, I never expected that month of June we'll be back in our activities over 100% across all the market in Ontario. My expectation to the best was that the market will basically back to about 75% capacity. As you recall, late March, early April, our market literally halted and was down by almost 68% across entire province and in Canada. And gradually, sometimes in April and May, the market picked up to about 50% capacity. But we were all surprised by a month of June performance. So let's take a look at the 5 key metrics in the COVID housing market. The number one, I have prioritized them by the importance. The number one that really had a psychological effect in terms of sustaining our market and giving the confidence to consumer has been the government support. Stimulus packages that was introduced early on by the federal government and provincial government, they played a big role in sustaining our market. Second, which we are still dealing with it, and it's going to be an issue for the second half of the year, is employment. Third, low interest rate and financial liquidity. Once again, Canada took the lead in terms of making sure that all the big 5 banks, they provide the low interest rate and financial liquidity in the market, so the consumer borrowing pattern doesn't stop. Immigration is another important matter that has to be dealt perhaps in a phase 3, and obviously everyone is looking forward to ultimate solution, which is the vaccine. So let's take a look at the early sign into the gradual recovery. Canada economic contraction ended in April. Basically, this means that whatever the drop that happened in the multiple sector of the Canadian economy, from the housing, from the construction, from the manufacture, from the oil sector, the contraction ended perhaps by the end of the April. Basically, we reached the bottom line. In early month of May and later on in June, our employment jumped by almost about 1 million in June. Still, we have about a 1.3 million unemployed people. Total unemployment number of the people that lost their job, perhaps most of them temporarily, was close to about 2 million people. For the first time in June, we have seen the Canadian manufacturer sales is a modest gain of the 6.5% gain, and is due to the going back to work. It's a very simple strategy. Majority of the manufacturer, they were halted. Majority of the manufacturer, they were probably at the half capacity of the performance, and now gradually the public is going back to work. So when the working hours is gaining and increasing, therefore you will see the modest growth in also sales. Ontario housing started in month of June almost up by 36% from May, and right now standing at about 78,000 homes. Canada-wide, a month of June was about 212,000 new homes started, and there are close to about 250,000 building permit in Canada-wide. Therefore, Ontario almost represents 1/3 of the new home construction in Canada. Home buyers and sellers, literally in the month of May, because of the pent-up demand, they played the catch-up in June. So imagine homes owners, they were forced to stay at home. They couldn't sell their home. They were concerned about how the procedure of the pandemic will go through the sale of their home. Similar pattern with the buyers. And as soon as May 19, the provincial government started the first phase, which we also predicted sometimes in early April, that if we follow the health guideline, we should be back on a first stage by mid-May. To be exact, was May 19. And Remax Hallmark also opened its first phases of offices also on May 19. Retail, I call it therapy, spending is stabilized. Interestingly, that although the major hit has been on the hospitality and retail and food industry, year to date, the retail business is only down by 25%. So it shows that how strongly the consumers, they played a strong role in terms of the catch up and spending pattern for the retail industry from the beginning of the reopening, which is the May 19th. So for the last basically 60 days. So let's take a look at the Canada employment summary. This is a very important factor that we need to pay attention. As you can see, in early April, almost about 1.9 million, 2 million Canadians that lost their job. About 1.5 million of them are the full-time, and about 500,000 of them that are part-time. If you fast forward to June 20th, which is 60 days forward, 2 months forward, you can see the 12 months average employment is about 135,000 for the employment and 91,000 for the full-time and 44,000 for part-time. So, and we broke it down by the public and private and self-employed. The biggest segment is a private, which is Remax Hallmark is one of those companies, similar to many other private companies that slowly are recalling their employees come back to work. That's why we had a major shift. We had almost about 300,000 employees came back to work in month of May, and in month of June, almost about 1 million people. We will talk about the employment down the road, but the stats clearly indicate that the biggest segment is a full-time, and the part-time people are a smaller segment. And the full-time, a majority of them, perhaps even 90% of them, are temporary layoff. They were not permanent layoff. So there was another report came out by Economics Chamber of Canada, and it shows the housing saving rate in Canada for the first time in almost 10 years has spiked to almost 6%. It's natural when the homeowner are not spending on travel, on leisure, on retail, on food industry, so the saving will increase. So Canadian, in fact, are actually now for the last 3 months are hoarding cash. So let's take a look at the consumer's behavior. Consumer's behavior will play a very strong role in terms of going back to the normalcy of our economy. And if you take a look at this curve, shopping is spending is steady at the lower level. If you take a look at the orange bar and also the blue bar, blue curve, you will see the household and the department store specialty are really increasing on a steady pace. Another segment of the behavior, the only sports in the industry that really probably going to have one of the best year because of the physical potential and possibility of the being able to have a physical distancing is the golf industry. You can see the book, music, and entertainment, cable, telephone, and communication are steady. And you can see the entertainment, art, and movies are slowly picking up, and they probably going to have a long road for recovery. Another segment of the consumer's behavior, as you can see, gas, automotive, parking, and transit. I'm not sure if you have noticed or not, but recently the traffic on our major arteries, highways are back to normal. And one of the reasons is the consumers, they don't feel confident yet to travel with the public transit because of the physical distancing. So they feel more comfortable using their own private car. So as you can see, the gas, automobile, and parking and transit on a steady rise, but a travel with the public transit, it's really at a flat rate and is still below the normal rate, which is almost by about 55 to 60% below, versus the gas on automotive, which is the private, is almost reaching to the equilibrium level. So let's take a look at what happened across Canada in terms of housing affordability, which we call it the buyer market, seller market, or the balance market. If you take a look at most places in Canada, you will see the market either is a balance or seller's market. And in terms of the buyer market, you will see only in the Fraser Valley and Edmonton, the buyer markets. In the next graph, I will show to you even in those buyer market is tipping slowly towards the balance and perhaps is going towards the seller's market. If you take a look at this graph, you can see for sure Toronto and Ottawa. Ottawa is on the top of the curve of the seller's market, and at Toronto, depend on the area, the GTA is a large area, is sitting anywhere between the balanced market to the seller's market. And interestingly, even in the province of Alberta, you can see the market is balanced. Hardly you see any buyer's market, with the exception of the slightly in Vancouver, which is the Fraser Valley and St. John. So all the market across Canada are showing either balance or the seller market. So let's take a look at the investment trend in Q2 of the 2020. So this is a major part of the attracting the investor, could be the foreign investor, could be the local investors, investing in the downtown class AAA offices, tier 1 regional malls, single tenant industrial, suburb multi-residential, or any asset class average. As you can see, the Q2 2020 had the increase of the almost about 5% in terms of the investment versus the Q4 of the 2019. So there is an appetite, even despite the fact that many of the commercial spaces, they were shut down, or many people are working from home, and particularly the retail and the mall, they were actually shut down for a period of almost about 4 months, but investor didn't stop. It's actually increased their appetite to invest more in those segment of the market assets. So top contending markets, Toronto, Ottawa, and Montreal are the top market in terms of the investors. The investors are heavily investing over there. And as you can see, is anywhere with the ratio of the between 1.5% to 2% in those three markets. Obviously, the Toronto, which is the leading market, and then after that, Ottawa, and then Montreal. So Q2 investment highlight, overall cap rates in Ontario picked up by about 5.15%. Ottawa showed the most increase. Transition to the remote work environment pushing up the sublet market. So therefore, the suburb markets are much more attractive to the investor. Industrial real estate top performing asset due to the sharp increase of the e-commerce. So any industrial warehouse with accessibility to the transit and a highway will be a prime target for the investor in the future. Food anchor in the retail plazas will perform beyond the mall because it was proved the retail plazas with the accessibility from the to the parking, particularly with the anchor food tenants, they were one of the first one that the provincial government to be allowed. So therefore, for the future, most heavy investors also are geared towards investing in those areas. Demand for multi-residential is going to be strong because there will be a huge segment of the people that they cannot afford to buy houses in Ontario. Therefore, the multi-residential will be for years to be strong in terms of the rate of return and investment and rental market. So property type by barometer and which one they were really strong in terms of the investment, single tenant industrial is becoming the most lucrative investment in terms of the commercial, and multi-tenant industrial and a suburb also is going to be those areas that they are very attractive. So apartment versus condo. In the past 4 months, the rental rate has dropped by almost anywhere between 6 to 10%, with the exception of the three market. In Ontario, Brampton, Milton, and Richmond Hill, they had anywhere from about 1% to 3.5% growth in terms of the rental market due to the lack of inventory. Otherwise, across the GTA, the rental market is down by 6 to 8%. In Ottawa and in other suburbs such as Durham and such as Barrie, the rental market has been steady and there is no drop in terms of their prices. In fact, actually, they do have lack of inventory, in particular in the Ottawa market. So let's take a look at it. There was a survey that was done among the economists, 13 economists with the different banks and different lending institutions in Canada. And one of the key questions was, how long do you think the rates will hold at the 0.25, the Canada bank rate at 0.25? And as you can see, the majority of the economists and the expert in this industry, they do believe the bank rate will be same rate, not even maybe might go to the zero, sometimes till end of the 2021 and even could go to 2022. That's one of the key factors that the Canadian government cannot risk to increase the rate, because increasing the rate will take the liquidity transaction out of the market and will not allow more and easier and fluid transaction happening in our market. Therefore, majority of the people believe that this market will continue to have a low interest rate and a low borrowing rate. Another question was economic outlook survey. If you take a look at the most important factor is employment and underemployment. 75% of the economists, due to the retraction of the unemployment in the month of May and particularly now in June, they do believe that majority of the people that they lost their job are the professional people that they are working for a solid company and it was a temporary layoff. Therefore, majority of the economists are not really worried about the rate of the unemployment, which is from almost about 16% as of month of June. It's been dropped to about 12%. We suspect the unemployment rate by the end of the summer probably should sit anywhere in between the range of about 7.5 to 8.5. Another question, average forecast property value by end of the 2020. Is interestingly, majority of these economists at the beginning of the pandemic in April, and most notably individual, the head of the CMHC, were talking anywhere about the drop of the real estate value between the rate of 10 to 18%. But the most recent survey shows that anywhere between the rate of 2 to 4%. And this is quite natural because there will be some segment of our real estate markets, such as luxury market, such as certain areas that they have no accessibility to the transit and it's more difficult to get to the core or services that they will have adjusted rate. So 2 to 3% traction in terms of the drop of the real estate value across the province of Ontario. It's literally nothing. It still shows the positive growth year over year. So let's take a look at each market. So GTA freehold pricing trends. If you take a look at it, we had a major drop by almost early April. And if you look at it right now, by early or by mid-June, we are back to close to about a million mark. So the median, which is the orange graph, that's a price index for the consumers, because majority of the consumers, they do average price versus the benchmark price. The benchmark price, as we discussed also in the previous presentation, is more detailed price comparison versus the median. If you take a look at the GTA condo market, you will see at a slower pace rather than a sharp spike. You can see again by early April down to almost about $540,000 average, and now we are up to about 575, 580 average. So Toronto Regional, as of this morning, has about 1.7 months of the inventory. Average price rose by about 8%. Average price is sitting at about $931,000. Year-to-date sales is down by 19%. So we need to pay attention to this. Although we had a great month of June, because of the contraction of the month of April and May, because we had almost loss of the activity of almost about 50%, we are still down by almost about 20%. We are hoping if we continue to have a strong month of July and August, hopefully by end of August, we will be at the par. Basically, by the end of the August, the number of the transaction from January to the August of the 2020 versus the 2019 should be at the same level. New listing year over year are up by only 2%. Condo prices are sitting at about 631,000, and condo sales activity down by 16%, but the prices are up by 7%. That's also another important factor that why the condo activities are down by 16%. Due to the multiple factors, the new launches with the developer are not at the same speed as the last year. We should have had about 6 to 8 launches, at least in the last 60 days, but we had only about 2 or 3 of them. And as you can see, there is a huge movement from a downtown core to the suburb areas, because consumers now, they prefer to have a freehold property such as a townhouse, semi or detached, with the same price point of the condo as a downtown. But eventually the downtown Toronto condo market will pick up, because as you can note it, in many years, the downtown Toronto, it is a downtown Toronto. It's one of the most robust cities globally. In fact, the June report of the North America showcased that Toronto and the GTA is one of the most attractive and robust center in North America. Is actually ranked number 1, and Montreal was ranked number 3. So Ottawa freehold pricing trends. Ottawa freehold pricing trend didn't take that much impact as the GTA, as a Toronto. As you can see, had a little bit of the dip sometimes in March and April, and it's really spiked back up, and now we're sitting at almost about $580,000 to $600,000. Condo market had a tremendous growth in Ottawa. The condo market is sitting at about $663,000 average price. So Ottawa, this is very important. Ottawa is the number 1 leading market in Canada currently. It's actually at the peak of the seller's market. We talk about the month of inventory, but let me tell you, Ottawa is for the first time we have to talk about the days of inventory. Ottawa, as of this morning, has about 0.8 months of the inventory, which is basically 24 days of the inventory. Average price rose by about 14%, 554,000. Year-to-date sales are up by 13%. New listings are down by 1.6%, and year-over-year condo prices are about 352,000. Condo sales activity up by 17%. I predict that the condo market will be much more stronger in the next 2 months because, as you can see, the inventory level and for the freehold homes are dropping, and there will be a shift of the consumers that they will want to basically take over the condo market for multi-purposes, for investment, because the rental market also in Ottawa quite tight and is actually one of the market that hasn't had any drop. So year to date, Barrie and Simcoe County, Q2 of the 2020 was not as strong as the Q2 of the 2019, down by about 7.4%. Barrie is always a market that has a tendency of the restarting with a delay, but the market is really strong and moving forward. Average price during the Q2 2020 up by 12%. So take a look at the first line and the second line. Although the market in terms of the momentum was down by 7.4%, but the prices are up by 12%. Simcoe County is up by 7.7% in the transaction, and average price is sitting at about $554,000. City of Barrie is up by almost 12%, and average prices of the Barrie is about $528,000. Again, is another suburb market which is close to arteries of the Highway 400 and accessibility coming to the city of Toronto. Great hospital, great amenities, and also in terms of accessibility to the cottage country and multi-condominium now across the shore of the Lake Simcoe, and multiple project, which is becoming a destination for the second homes also because of the close proximity of the city of Toronto. Durham region, 40% of the homes sold, is one of the hottest market in Ontario, is 47% of the homes sold over asking. Average days on the market is now sitting at 15%. Average sales price is about $684, and average price up by about almost 11%. As of today, there are only about 1,331 new listings for sale, which is 42% decrease over the same previous year. Durham, again, very similar to Barrie and Simcoe County, but in a much more better position due to two factors, Highway 401 and GO Train, which directly bring you to a multi-station within the city of Toronto's boundaries. And many people, and the development that is happening in the region of Durham is one of the most leading development that are happening in Ontario, from the casino, from the Universal project, and the average home prices of the detached home are quite affordable compared to the homes in Toronto market. York region, another hot market, 31%, one-third of the homes sold over asking price, is the only region that the rental market age actually had an increase of the 2.8% in terms of the value. Average days on the market is 22 days, and average sales price is now up over $1 million, is sitting at about $1.1 million. Average price in June just went up by about almost 17%, and as of today, it's only 3,456 homes in the York region, which is a drop of 33.8% over the same period of the last year. So we take a look at the Ontario's freehold price allocation. We had these two charts in month of April, and in the month of April, the difference between the orange and a red bar, in some segment, they were quite far apart, particularly in the higher end home, the homes in the price range of the 1.5 and above. And if you look at it in the month of June right now, we will see that is actually the bars are getting very close to each other. Even in luxury homes, it's past the month of the February, which was a very healthy market. The only segment, interestingly, the luxury market seems is performing better than the month of February, but the homes between $1 million and $1.5 million is very close to performing in similar to the month of February, and probably is below the month of February for that segment because of the lack of inventory, because the homes in the range of the $1 million to $1.5 million, there are not that many of them out in the market. You can see in the softest spot, anywhere from about 600 to 900,000, well above the performing of the month of the February. And obviously anything below 600,000, we don't have that much inventory, and it's almost at the par, similar to the month of the February. If you take a look at the condo market The softest spot, anywhere from about $400 to $800,000, is performing quite well, particularly $400,000 to $600,000. But even in a higher price bracket, we are reaching to the performance of the month of February. So these two graphs really demonstrate that we are really in multiple segments of the price allocation of the home, the type of the home. We are reaching back to the same level that we started in February. And in February, if you recall, community and agents and the industry were complaining that we're back to the crazy and madness of the 2017. So we talk about the mobility reports in our past presentation. This is the latest report of the Google mobility reports, and you can see retail and recreation is only now down by minus 20%. What does it tell you? From the minus 40 to minus 50%, it shows back that the consumers are re-engaging in those activities. Grocery and pharmacy used to be plus 30, 40% because people were panicking, they were hoarding food, they were taking so many vitamins, so many medication as a preventive measure, but you can see the confidence level among the consumers is there and is only sitting at a plus 3%. Take a look at the park. People are more comfortable going out. Camping, picnic, and everything is almost at 120% activities from the baseline. Transit station, it's still down as we talk. Consumers, they don't have the confidence taking the public transit. Workplace, from being down at almost minus 80%, is at minus 46%, which shows that many companies, they have rotational shift. Many companies are still working from home and from work. And take a look at the activities in your own residence. The activities in your own residence is only plus 14% within the homes, which shows most of the time that people are either outside and less spending time at home. So this is very important that we realize why Ontario has been resilient and why Ontario will be the first province probably beat this pandemic, and also in terms of the financial crisis that has been created. There are 4 fundamental business right now in Ontario. Used to be one of the primary was auto industry. As you know, for over the years, auto industry has become a secondary business basically in Ontario. Finance, insurance, real estate, and public administration. So public sector from the notably federal government in Ottawa, and also many other larger ministries compared to other provinces are located in Ontario. Real estate and construction has been a big part of the GDP of the Ontario, and insurance and finance. Majority of the corporate hoard of the Canada station in Ontario. 52% of the GDP of the Ontario is in those 4 segments. Ontario is the largest consumers market, and it's a financial capital of the Canada, and therefore it creates a vibrant labor market. So all these 4 categories of the industry, none of them has been hit by the COVID. Finance hardly had any impact. Insurance, the same thing. In fact, the finance and insurance business are boosted and they are very robust. Real estate, because of those 2 first segments, which is the finance, really, and because of the migration and because of the public administration employees that they are here, it's really moving towards a full recovery. So Ontario is no longer heavily involved in the manufacture, retail. That's not a major part of the GDP. These 4 categories are representing, as I mentioned, 52% of the GDPs. So because of those, of a recovery was much more easier and faster than compared to the other provinces. So a realistic outlook, what's going to happen? We talk about the unemployment in terms of 1.9 million people in Canada, and 900, almost a million people contracted back in month of the June. It's really proof that majority of the loss of the unemployment will be on the lower paying frontline service job. Not to say that it's not worthy to mention that, Of course, the hospitality business, food industry, and retail will be impacted by the unemployment for perhaps a short period of the time. But majority of those employers are not have a major impact on a real estate market. We believe that the summer will be, excuse me, we believe the summer will be to remain very competitive, particularly the month of August, as July and August. We view all our appointment activities from our front desk, from our help desk on a daily basis, and the activities, they have not dropped. It's actually growing on a week by week, anywhere between 2 to 5%. Another important factor that I do believe that a federal government will not give up easily or on the government support, and there will be continuous of the government support, perhaps in a different format at different terms. Federal government just recently announced that the SERP program will be switched to the more funds for unemployment because they want the people go back to work. We expect, because of the confidence and a mental boost, the household spending, as we demonstrated to you with the consumers' behavior, will grow on a steady basis, because we feel very comfortable these days going to work, going to the shop, going perhaps even to the patio of the bar and restaurant. And let's acknowledge that the Canadian government and the provincial government, they have done a great job. There is no major evidence or factor that could put pressure on decreasing the housing market. And we haven't even started the immigration pattern. The government is in discussion in terms of the phase 3 of the reopening, to basically how to bring the immigrant into the country with the proper testing and tracing. And WHO announced that Canada is among the top 5 countries in the world in terms of handling and managing this pandemic. And one of the main reasons was the political parties, they set aside their differences during the last 4 months, and the stimulus packages that the federal government has established. Yes, many people might question that the debt that we have created for our country, which is now almost about 440 billion and 1.3 trillion, maybe the federal government should have done differently. But the reality remains the same, that federal government tackled this from one view, and the view was giving the consumer the confidence and assurance that their life will not be jeopardized, their saving will not be jeopardized. And that was the best approach, to my humble opinion. And many other countries, many European countries, such as England, such as Denmark, such as Norway, they have also had the same approach, and the success has been the same. So this concludes our presentation. If you have any questions, Shant is here with me, and he will read your question, and we will try to address your question to the best of our ability. Thank you.
Okay, so first question comes from Ali. Oops, ZIA. Sorry, Ali, forgot your name wrong. CMHC and lots of economists are forecasting a drop in housing price in Q4 or early 2021. What do you think about that? Most economists are saying once the SERB is finished, we will see an impact.
Well, so, Ali, if you take a look at also the economists, we indicated the recent survey by the economists, by 13 economists. They are much more expert than me and many other people on this session. They all unanimously believe that the contraction of the real estate house prices will be anywhere between 2 to 4% in Ontario. Yes, the SERB, maybe the $2,000 funding and help that it was given to the Canadian while they were at home, there was maybe more than generous than it was supposed to be. But the reality remained, this one thing is we should pay attention, is an unemployment rate. Usually in a financial crisis, the number one factor, imagine 2 million unemployed people. What do you expect going to happen? You expect that the real estate market is going to be halted. You expect that the real estate market basically going to crash, but it didn't. And the reason it didn't, because out of these 2 million people, probably 1.5 million of them are on the professional employer services, meaning their jobs are secure and they will get their job back at what for. Yes, there will be some casualties, but I do not think that the basically Q4 or a Q1 of the 2021 will be a major drop in prices because again, the unemployment rate, what you see right now is an artificial rate, it's not the actual rate. Before we go to the pandemic, the unemployment rate was almost about 5.5%, which was basically 1 million Canadian before the COVID, they were unemployed. So we will probably add another 500,000 to it because of the pandemic. Again, it will be a 12-month cycle, temporary fee, even for those 500,000 people. And so I disagree with the CMHC. In fact, even many economists, they noted that the CMHC statement was a bit broad and over-exaggerated.
Great. The next question comes from Ravi Singh. Steve, the common concerns are 1, unemployment rise, and 2, deficit rise. With those two concerns, which markets are most exposed? Luxury, condo, multi-unit, single family?
So unemployment, I think we addressed the unemployment. The deficit is an argument with the federal government that the borrowing cost, it's at the cheapest point historically. Therefore, the amount of the deficit that they have currently maybe cost the federal government less than even the pre-COVID. Let's not forget, eventually the interest rate will go up, but that's another reason for at least 2 or maybe 2.5 years, the federal government will not have any other alternative than keeping the interest rate low till the momentum of the economy back to normal 100%, and perhaps we have a positive GDP rather than the negative that is going to be this year. So the area that I would be concerned, and personally I was, but frankly, today I feel less concerned, it was the unemployment. If the federal government drops the government assistance, I'm positive the federal government will come with some form of the support for the small businesses, in particular the hospitality and a retail business, in order to make sure that 500,000, the frontline workers, also can basically navigate through this stormy water. And this could be in a form of a business loan. This could be in a form of the small grant. And Ravi, deficit, yes. The reality is eventually it will hit us. Eventually it will hit us in the service fees. Eventually it will hit us in the higher taxes. But that's a price that we had to pay to navigate through this pandemic. Ask yourself this question. It's easy to say and talk about the deficit. Oh, we don't like to have the deficit. We don't like to see $1.3 trillion. We don't like to see 440, double what the federal government estimated. But they had two choices. Let the economy completely crash. Unemployment would have been almost 25%, or give the support that the consumers and the Canadian they needed to navigate through this crisis. And the number one goal of the federal government was mental and psychological support. And that was the key that saved us for the last 4 months.
Next question comes from Ilya Yazdanian. What are your thoughts on the foreign buyer holder tax? What happens if Canada adopts a national foreign buyer measure?
Very interestingly, if you take a look at what's going to happen with the foreign buyers. So immigration has been halted. And the reason immigration has been halted because the cause of this pandemic initially was the travelers. So federal government and provincial governments are working tirelessly how they can restart opening the gate of the immigration. Immigration for Canada for the last 20 years has been the most important segment of the growing the economy. Every immigrant contribute in a different format in terms of from the cash, housing, buying cars, retail, travel, their children, families, education, health system into this country. So the federal government will not stop the immigration policies. In fact, right now, because of how Canada has done what a great job in terms of managing this pandemic, and with the global crisis that we have more than ever, such as Hong Kong crisis, such as Middle East crisis. Middle East is one of those areas that really has done one of the worst part of the world in terms of this pandemic. Inflation rate in some part of the Middle East, such as Iran, is almost sitting at about 30%. Hong Kong people are not really feeling comfortable in terms of the change of the policies by the mainland China. So I don't think so they will change foreign tax. They may actually make the foreign tax more blanket, Ilya, as you suggested, for all other provinces, and other provinces adopted. Because if you notice in one of my slides, most of the market in Canada, they are either balance or sellers market. So there is appetite beyond only Toronto, Montreal, and Vancouver to go to the other part of the country. And that's why you have noticed, notably in the last 4 years, Ottawa is one of the cities that has attracted many foreigners. And I will see a bigger flow of the perhaps not independent quality of the immigrants. Perhaps you will see more entrepreneur and investors program again will be reopened, and there will be floodgate of the funding coming to Canada. And because those people, they want a safe place, they want a country with the diversity, they want a country with the good healthcare system and good education system.
Next question comes from Fred Farjipur. He wants to know, why have we seen less activity in Richmond Hill area comparing to others?
Well, activity in Richmond Hill is less. How you measure the less activity, Fred, is basically based on the inventory. The inventory, as we suggested here, as of today, in York region is almost down by about 35% less listing compared to the same period last year. So you got less listing, less activities. Many sellers, that's actually a good sign. You got to remember, if the consumers, they were stressed out, financially stressed out, what would you do? You will put one of your biggest assets for sale. Canadians are in a good position. They're hoarding cash. Their saving is up by 6.1%. And they have, obviously, their jobs are secured. Their income is there. They haven't lost. And therefore, they are not putting their asset up in the market. So, and we are in the era of the transition that the consumers are on a waiting period cycle. They do believe, majority of the sellers, they do believe that the transition is short, and they are sitting on their properties because they are banking on the higher prices down the road.
Next question from Vincent Vomaro. I have noticed some homes coming back to market after financing falling through. Will buyers struggle with qualifying due to job loss?
Yeah, Vincent, for sure there will be, again, some casualty, of course. The banks overall. This happened in 2008 too. In 2008, if you recall, we had a true financial crisis. When a financial crisis happened, that means most major banks, they take a conservative position and they basically make their lending practice tougher. In 2008, federal government, late Jim Flaherty, which was the finance minister at the era of the Mr. Harper, asked 5 banks, do not stop lending. This is exactly what's happening right now. Federal government, Prime Minister Trudeau, through the CMHC's funding, has assured the bank that we need you to have more liquid cash and asset on the street to make the lending much easier for consumers. Frankly, a company the size of ours that does almost about 22,000 transactions, in the last 120 days, I have seen, and the leadership team has seen, maybe 5 cases that the deal are fell apart. In most cases, the financing has been managed, and there are different forms of the financing available on the market, and we are not anymore a Canadian system which only 5 banks are out there. There are other institutional lenders which are very competitive to the banks, but we have to acknowledge there will be people that they are, because of the affordability, they may not qualify for the prices that they wanted to buy, particularly in the area that they wanted to buy. Therefore, that's why you see a big shift to the suburbs is happening. And some areas are no longer, I call them suburbs. York region is one of those areas. York region is, because of the proximity to the city of the Toronto, it's really, to my opinion, is no longer a suburb area because Vaughan, Richmond Hill are way too close to the 416 area. So, but be prepared to qualify your buyers, to make sure that they have all their pre-approval ready, and to make sure they have even additional cash if it's needed, because I do believe for the next 2 months, continuation of the multiple offer will continue based on one simple activity. Our front desk demonstrate how the streets is vibrant on a daily basis. The minute I see the front desk activities drops, that's a first indication of the consumers are retracting. I haven't seen that. In fact, I've seen it contrary, that the consumers are going strong every day, every day.
Next question from Joe Palawan. Which area currently is growing the fastest in the GTA?
Durham is in GTA, and Barrie and Simcoe County are the fastest growing area. There are some hidden pocket within the 416 area, such as the Kingston Road and Brimley, Kingston Road and McCowan, sort of the east end of the beach area. And also on the west end, as strong as before, Brampton, Milton, Mimico, they're going very strong too.
Okay, so the final 3 questions. Next one is from, okay, sorry, we have 4 questions, sorry. Next one is from Rob Coran. Hi, Steve. What are your thoughts about how U.S. ruined economy will or may affect Canada or Ontario's economy?
Well, U.S. is our biggest partner. If you take a look at, this is a puzzling question that maybe I have no answer for it yet, but I think all of you should look at it. So, health crisis caused a financial crisis indirectly in our global market. Travel industry literally is halted. Accommodation, hotel industry is really halted. The retail industry, from the standpoint of the brick and mortar, it's halted. Food industry, it's just picking up the momentum. But you notice that the Q2 of the 2020, the stock market was one of the best performing for the last 10 years. And this brings this question: how could we, stock market, which is basically representation of the many companies out there, even related to the airline industries or hospitality, they are performing well? I think because of the stimulus packages that do exist across the globe, all European, all the G20 countries, including obviously US, I think the impact of the economy across from border to border will be less felt. The only concern that we have right now as a Canadian is the opening of our border, because we truly have managed our crisis quite well. And we can no longer, not only us, no other countries, Germany, which is one of the leading G20 countries in terms of the GDP and performance and manufacturers, nobody can afford anymore to shut down the countries. So that's why this third phase, and what you see right now happening in many countries, it's about teaching the consumers with the new behavior of how to interact, how to regain their confidence, and how to go back into the normal day of their life. U.S. economy still is strong. Yes, they got a high number of unemployment, but U.S. overall is doing good. It will have some long impact down the road, which we will feel it, which is through the deficit. Um, as of 2 weeks ago, the ratification of the new trade NAFTA was started about 2 weeks ago on Wednesday. And I think the trade between the two countries will continue going back and forth because they are our biggest exporting partners. And let's see what's the election bringing to us, because the election was also, with the US election, was going to be very important, how Mr. Trump approach will be towards the global trades. But really, no one knows, Rob, what will be the impact of the US and Canada. It's too early to decide about that.
Next question from Andreas Batakis. Mortgage deferrals, mortgage deferrals expiring in September. I believe about 745,000 have taken place in Canada. Do you believe this may impact the tight inventory?
I don't think so. I do believe a lot of people took advantage of the mortgage deferral, not because of their financial stress. I think it was more psychological approach. Consumers, they were really not sure what would happen. Um, let's go back to the month of March. Ask yourself this question. In the middle of the March, when the pandemic started, or even early April, I think all of you were questioning yourself, oh my God, we're done. We're done, and this damn thing is going to probably be here for 6 months or a year, and the economy is going to crash, and we're going to be in recession. So I do believe a lot of people take advantage of the mortgage deferral just simply for preserving the cash flow in case something worse happens. So there are people truly that they need it, and now they are back at work. And when you really think about it, the interest rate that you're going to pay for this 4 months for mortgage deferral, and the gamble of not taking it, it was worth it to take it. And the banks are not losing money. The banks are making money actually through this process. So I'm not really worried. That's on the news. A lot of people saying, oh my God, 734,000 people come by the end of the August. They don't have the mortgage deferral and they don't have a job. There will be some that will not have a job, because those are the ones that they are within, again, that frontline hospitality business. And those are the ones that is going to basically impact our business to some degrees. Even economists, that the 13 economists that they do believe 2 to 4% drop in the prices, let's take a more conservative approach and let's think about it. It gets worse. If you have a drop of the 5 to 10% in our prices, do a historical approach. In the last 10 years, the prices are growing every year double digit. Let's say even if they growing by about 10% on an annual basis. So that means from 10 years ago to now, the price of a home has doubled. So if you lose 10% of it, you're still in a positive net growth. Yes, there will be people that they bought in the last perhaps 16 months. They will see a loss based on their down payment. If they will put a minimum down payment of the 5%, your loss will be almost about 35% of your 5% down payment. If you put more down payment, your loss will be a little bit less. So I would wait to see that program overs, and then you will see. I do believe more than half of that 750,000 people, they just took the program for a safety net.
All right. Final two questions. Next one comes from John Ye. What do you think of the housing market in Windsor?
Don't have much information about the Windsor. I know it was one of the hardest hit due to the foreign workers and due to the cross-border workers. Many doctors in that area, they work in Michigan, and actually over this weekend was this had the highest rate of the infection, almost about 87 people in that area. And as you notice, the provincial government had a difficulty of the reopening. And that will be a very key metric for a phase 3. Phase 3 for us is immigrations. We need to bring the immigrants back. And phase 3 for us is the school, which is going to be September. And the government really is putting probably more than anybody else is thinking how to do this measure. And the only way to do this measure is by proper testing tracing and treating. And that's really got to be the front line. And in some part of the Europe for a school now, they are talking about doing the testing of every student, every teacher testing on a regular basis, because this test, the result can be out in less than 24 hours if it needed to be. And I think Windsor is suffering that area. So the housing market in Windsor probably will be flat for a while because of the confidence of the consumers is not there. Every market that there is a confidence of the consumers based on the employment. So we got low interest rate, we got consumers' confidence because they got their job, so that market will move forward. And the consumers' confidence, if it's not there because of the health issues in that region, probably the market will be flat or could have some dip to it.
And finally, a question from our very own Deborah Bain. Do you think the US-Canada border will remain closed, and for how long?
That's a very question. Somebody asked me that question also last night. People are criticizing Mr. Trudeau about why he's not taking a strong position against Mr. Donald Trump. You got to remember, Mr. Trump is not a usual president. He's not a diplomat. And when you are dealing with a bully that he might retaliate, and that's why you see Trudeau maybe is not being bullied against him, because he really did some retaliation in the last 4 years that basically caused some pain and suffering and unnecessary stress for the Canadian. One of them was a negotiation of the NAFTA. One of them is the issue that we have with the China and the president of the Huawei and the two Canadians that they are hostage in the China. So I think Trudeau is under a lot of pressure. Canadians are educated. Canadians are vocal. Canadians are saying we don't want the border to be open. I think he might open the border, but he might put some system in place that literally make it very impossible for American to come across the border. One of those should be the testing, meaning anybody who wants to cross the border must have a test certificate before crossing the border. But the trade for the border used to be now essential. I think the border for trades will be open because you need to basically push the economy going forward. Remember one thing else also. If you take a look at the numbers in the US, yes, it looks crazy. Yes, the numbers are basically gone crazy. Yesterday, 16,000 Floridan that basically they were contracted the virus. But the rate of the mortality in the US in that large, vast country, even yesterday was only about 331. So the rate of mortality is dropping because I do believe, not only in US, even in Canada, the medical system have learned now how to deal with it. This is no longer a surprise. So they have a protocol in place how to deal with it. So don't pay attention too much to the rate of the infection there. Just pay attention to the rate of the mortality. Because many European countries also, they have still the same rate, is hurting the community. The virus from one body to another body become weaker and weaker, and you lose its momentum. But he will not have no other choices, unfortunately, to open the border. But how to open the border, that's $1 million question that nobody knows. Any other question? Thank you very much for your time. And tomorrow, Shant wants me to remind you, tomorrow at 10 a.m., leadership team, Ken, Deborah, and I, we will have a town hall meeting live. We would like to discuss the Remax Hallmark, what we have done in the last 6 months, what we are planning to do in the next 6 months. And it will be a live session through remaxhallmarklive.com. And it will be more than happy to answer any of your questions. Have a wonderful day. Enjoy your day. Be safe. Don't drop your guard. Talk to you tomorrow.